Welcome to Better Banking Television. My name is Paul Gentile. This month, Better Banking will discuss the topic of payday loans. What exactly is a payday loan? How does it work? What kind of interest does this kind of loan charge? And what happens if my payments become delinquent? We'll hear from Andy Posner, CEO of Capital Good Fund, who will give us the answers to these questions and more. We'll also be chatting with Brian Azar, Chief Lending Officer at Navigant Credit Union. Brian will explain what Navigant Credit Union is doing to provide members with a safe alternative to a payday loan. But first, we'll visit with Eli Sherman, a reporter at the Providence Business News. Eli recently wrote an article titled, "Where Can Rhode Island's Poor People Turn to Avoid Predatory Lending?" Our conversation with Eli sets the stage for this month's edition of Better Banking, helping us to understand the pitfalls that accompany payday loans and what options exist as alternatives to these kinds of loans. Hi, Eli. Thanks for being with us today.
Thanks for having me, Paul.
So you wrote an excellent story about something really near and dear to the hearts of credit unions, serving those of modest means, the so-called unbanked, underbanked. The FDIC shows about 7% of families are unbanked. You have about another 20% that are underbanked. So here in Rhode Island, the poverty level is better than the country, but it's sort of the lowest in New England. What did you find in your story about lenders? How are they meeting the needs of these folks that need a little bit more attention?
Yeah, it's a great question. Like you said, Rhode Island has less individuals and families who are living in poverty than the rest of the country, but they are worse off than the rest of New England.
Sure.
And so there are instances in every individual or family's lives that they may need to go to a financial institution to get a little extra money, whether that be for a broken down car or for a repair on their home, or even to cover first and last month's rent.
Right.
For a lot of them of a certain means, they have trouble finding that at traditional financial institutions,
right,
in which at what point they turn to the payday lending industry.
Right.
In Rhode Island, specifically, the interest rates that are associated with the payday lending industry are much greater than anywhere else in New England.
Sure.
So it is sort of a dangerous place, perhaps, for people who don't have the means to pay back that money that they're borrowing, because they can suddenly be caught into sort of a cycle of debt.
Right. Absolutely. So your story found they borrow once, they don't just pay that off and move on, right? They tend to borrow again, and that starts that cycle, that wheel, so to speak.
Exactly, Paul. So what happens is you might come in and you might borrow $300 for whatever reason, but you're not going to have the means to pay that back in time, plus the interest that is realized on that amount. So what you end up doing is either rolling over the loan or actually having to go in and borrow more to pay off the first one. So that
right,
quickly can turn a $300 loan into a $800 payment.
Sure. So credit unions and banks have usury laws. So at a credit union, for example, you can't lend over a certain percentage, right? So that's insurers. We have the interest of our members at heart. And we do a lot of smaller dollar loans to try to attract those folks who may need a repair in their car or their furnace, so to speak. Did you look at all the regulatory? Do you see anything in Rhode Island changing where maybe these payday lenders, predatory lenders, are going to be reined in a bit?
It's interesting, Paul. That's happened in a lot of ways in some of the other states that you guys represent.
Sure.
In Rhode Island, it hasn't yet. The amount, the interest that each of these loans is capped at is just extraordinarily high here. Can't remember the exact number.
Right,
I'm going to have to look it up for you.
Research.
But, right. It can exceed 260%.
Yeah.
So, it's in Connecticut, for instance, is 23, or I'm sorry, in Massachusetts it's capped at 23%. Yep. So that's a huge disparity between the two numbers. Now, the issue is that sometimes with these borrowers, they might be what banks, traditional financial institutions, consider subprime borrowers. And the regulatory requirements for traditional financial institutions to lend to these type of borrowers is quite strict,
right?
Especially in a post 2008 financial crisis that
Sure.
happened and all the regulations that came
Sure.
in wake of that. So they're sort of stuck between a rock and a hard place, even if they want to go to the financial institutions,
Yep.
the traditional ones,
Right.
to get perhaps a better loan. The financial institutions are somewhat, they have less leniency in,
Yep.
in how
Yep.
they can lend to these type of
Right,
borrowers.
it's a really important point. This is why the Consumer Financial Protection Bureau, which was created to regulate these sort of entities and the real big players, they have a payday lending rule coming out soon, and we advocate from the credit union side, we need to help people too, so let's not make it so stringent that we can't go further down the curve and reach out to these people. Because you're right, there is a certain risk profile when you get to that really, really underbanked person who just doesn't have the history of credit. So I know you talked to some credit unions in your story, and we pride ourselves on trying to do some of those small dollar loans. And I think you heard, but maybe you could speak to this, credit unions speak a little bit about getting those people to trust you, to start working with you, and to find you is even a challenging thing.
Yes. So we spoke with Navigant Credit Union,
Yep.
which is probably the best example, and they've launched a few different initiatives, programs in which they're really trying to address or reach out to this population specifically, and they're
Right.
offering a couple of different products and services to try and offer an alternative to payday lending, which is in itself an alternative to the financial
Sure.
institution. So
Yep.
it's a bit of a playback. And just sort of to go back to it, this is something that financial institutions were born off of, sort of small amount loans that were
That's right.
community members would bring in and put into the bank and then borrow against each other. And Bank of America, I mean, some of the huge financial players in the country were born out of this way. So
Right.
what Navigant is doing is to some degree a return to the most basic
Sure.
form of
Sure.
what banks and financial institutions are supposed to do.
And obviously, credit unions' roots or the cooperative roots were
course.
people couldn't get credit up in New Hampshire, where
course.
St. Mary's Credit, the first credit union was formed. French people there could not get the access to credit they need. So that exactly is like going back to the roots. I think one of the things you think about when you talk about the underbanked and the unbanked is, what are their future prospects for economic growth, job growth? When you look at Rhode Island, do you see, I know the governor's tried to do a lot of things to move the economy forward. What do you see in your financial reporting? Are we seeing an uptick here? Do you see some positive things coming? Or
From a financial services point of view, I would say that there has been more robust activity,
Sure.
especially in lending.
Right.
And whether that be real estate, commercial real estate, there
Right.
have been more deals being made. I think volume is higher here.
yeah.
And all of that lends itself to a chain of economic activity, whether it be from development or people
Sure.
borrowing money, and that's all good signs for
Sure.
the state, I would say.
Sure, great. So one of the things we think about Rhode Island is credit unions serve about 380,000 of the residents here, and we think there is a better opportunity when a consumer wakes up to credit unions. So we're trying to promote better values, better banking. One of the things about values of credit unions is not-for-profit cooperatives. We don't have to earn a lot of money
Right.
to pay back shareholders, so that's part of our value proposition. So your article really hit a chord with us, and that's why we wanted to participate and have you on today. Will you be doing any follow-ups on this article? What do you see going forward on the reporting in this area?
Yeah, it's interesting. A perennial issue, especially at the State House, is looking at this interest rate and trying to
Right.
perhaps rein it down to something that is at least on par with neighboring states.
Sure.
The legislation this year ended without anything moving forward, as has been the case for every year going back
Right.
for recent memory. So that's certainly something that we are keeping an eye on. And also, one of the things in talking with all the different financial institutions in this story, including the credit unions, one of the things that you focus on as an industry is financial literacy.
Absolutely.
And this is sort of one step beyond that, in which you're really engaging people into using real money to help themselves
Sure.
to put means towards whatever they might have going on
Sure.
in their lives.
Sure.
So As banks and credit unions continue to roll out programs that address some of these issues, as Navigant has, we will be certainly reporting on that.
That's great. I think that's a great way to end. Financial literacy, financial education, whatever we're talking about, the payday lenders, predatory lenders, getting a mortgage, the better people are informed and educated, the better decisions they make. So we're big, passionate advocates for financial literacy and financial education, and we'll continue to be so. So Eli, thank you so much. I think you give some great perspective on this great piece. I think it's a real service to the community here in Rhode Island, this kind of reporting, so we really appreciate what you're doing.
Thank you, Paul. I really appreciate it.
Thanks a lot.
Yeah.
Family's important to me, and when I come to the credit union, they always know exactly what I need. It's like one-step shopping. You just come here and they know what your needs are. And the credit union, I feel like this is where I'm taken care of. Do you remember that show, Cheers, where everyone knows your name and you feel real comfortable in talking with them? That's what credit union is for me.
Andy Posner is CEO of Capital Good Fund. He's also an expert on payday loans and predatory lending. Better Banking asked Andy to explain what payday loans are and how they can represent what for many have become examples of predatory lending.
So a payday loan is a financial instrument that was developed a couple decades ago as more and more people got shut out of mainstream credit cards, banks, and credit union loans. And the idea is very simple. You walk into a branch or online and you borrow anywhere from $300 to $500, and the idea is that at your next pay day, hence payday loan, in 2 to 4 weeks, you will pay off that loan. Now, the interest rate on these loans is about 260% in Rhode Island. Now, the industry will tell you that that's only if you keep the loan outstanding for a year, which is true. Typically, what would happen is if you did pay off the loan in 2 to 4 weeks, that $300 to $500 loan might cost you $30 to $50 of interest, which isn't too bad. However, the average person does not have the money to pay off that loan in 2 to 4 weeks. And the payday lenders depend upon that. So what they do is they roll that loan over. So in other words, you come and you say, I don't have the $330. They say, no problem. We're going to make a new loan for you now of $330. And the average person does that 8 times. And that's how a $300 loan can end up costing you $500, $600, $700, $800. And so this becomes a means of getting people stuck in a cycle of debt. The other thing about payday loans is that they don't help you build your credit. So if you make that payment on time, they don't report it to the credit bureaus. There's no benefit there other than just paying off the loan. What often happens is that when people can't make the payment, the payday lender will still go and try to pull the payment out of your bank account, which results in an overdraft. And so that starts to add to the cost of this financial product, which was supposed to help with a short-term need, but it becomes a long-term debt burden. So when we start to think about alternatives to payday loans, we have to understand that mainstream lenders, again, that's credit card companies, banks, and credit unions, tend not to like to do small loans. And often that means less than $50,000 or $20,000 because they take a lot of time to process and they don't make that much money for the bank. So it can be challenging to offer. And so the people that tend to offer these types of loans are credit unions, which are owned by the members and so are inherently driven to meet the needs of their depositors, who are often lower income. And then organizations like Capital Good Fund, which are nonprofits and are mission driven by definition. So in our case, we have a $300 to $500 payday alternative. However, it's not actually structured like a payday loan. So you'll borrow $300 to $500 from us, just like you would a payday lender. However, instead of it coming due in 2 to 4 weeks, we give you 12 months to pay it back. And that does a couple of things. The first thing is it means that your monthly payment is affordable. So instead of having to come up with $330 in 2 to 4 weeks, you just have to make 12 monthly payments of $30. It also enables us to report those payments to the credit bureaus, so you build your score anywhere from 60 to 75 points, which over time will make it possible for you to access other loans at lower rates from some of those mainstream lenders. Now, whereas the payday lenders charge the 261% in Rhode Island, like I mentioned, we charge 35%. Now that probably still sounds high, but when you consider that a $500 loan from us only costs $100 of interest over a year, there's no prepayment penalty, we report to the bureaus, we provide financial coaching, and there's no other fees, and that is anywhere from $300 to $700 cheaper than a payday loan, it starts to seem a lot more reasonable. And that really is a rate that allows us to just cover the cost of doing the loan while still helping people meet a short-term need. So our philosophy at Capital Good Fund is not that people get payday loans because they want to pay triple-digit interest rates or because they don't understand the downsides, but rather because they need money and there's nowhere else to go. So we want folks listening to this to understand that there are alternatives like that offered by Capital Good Fund, like those offered by some credit unions in the state, that can help meet that need while also having some of the other benefits and not having the downsides. So the easiest way to apply for a loan from Capital Good Fund, and our loans are anywhere from $300 to $20,000 for a variety of purposes, all personal loans. You can go to capitalgoodfund.org, or you can call us at 866-584-3651, and our entire loan staff is bilingual, English-Spanish, so we can help you out either way.
I love Navigant Credit Union.
Navigant Credit Union is one of the financial institutions in the state of Rhode Island that is taking a lead in offering its members a safe alternative to a payday loan. Its Smart Start program is designed to give members the cash they need when they need it, helping them to avoid the pitfalls of predatory loans.
Brian, thanks for joining us today and for your willingness to chat a little bit about payday loans and particularly the credit union alternative to payday loans. So I really appreciate that. My understanding is that Navigant has an option, an alternative for the payday loans that we see going on right now. Tell us a little bit about it. I believe it's called Smart Start.
It is. Thank you, Walt. Yeah, we created this Smart Start product basically to meet a need. We were finding our members coming in having difficulty repaying their payday loans. So what we decided to do is to create this product to solve that problem. And what Smart Start is, it's a loan that we offer. It's up to $600. It's for members in good standing with direct deposit into an account with Navigant. Once we've established that direct deposit, we'll lend up to $600 and we'll allow for a 90-day repayment term as opposed to payday where the loans just keep rolling over. So we're giving our members the ability to actually pay these loans off.
So basically then the criteria is to take advantage of this, a person would have to be or become a member of Navigant Credit Union. They would have to have direct deposit into their account at Navigant. And there would be a period of time when I guess it is that you would evaluate their credit worthiness, is it? If I'm correct?
Yeah, I think one of the neat parts of this program is we don't pull credit on our members. So if you don't have a credit score, you're also eligible, and it helps you establish credit for future needs.
Nice.
The other piece is we will follow a very broad guideline, 4 to 6 weeks. We see the direct deposit established and start coming in. If it's a new member, if it's an existing member, it's already there.
Yeah.
And that's really the only criteria that we would use.
That's nice. So basically then, you know, if a person was looking for an alternative to the payday loan as a member of Navigant, they then could borrow anywhere from $100 to $600 maximum.
That's exactly right. The maximum is $600. Many people will apply for less. It might be to refinance a payday loan that they currently have that they haven't been able to pay off. It may be to meet an emergency need. It might be a car repair. It might be to bridge a rent payment. And then we give that flexibility of a 90-day term to repay the loan, keeps the payment small, and it gets the loan paid in full at the end of 3 months.
You know, tell me, how was the program conceived? What kind of gave birth to it at Navigant?
Yeah, I think, we're all about trying to improve the financial lives of our customers and our members. So we're very focused on what we see in the field, in our branches, and this came from members coming to us with a problem. They either couldn't repay their payday loan or they had an emergency need, and we didn't really have a product that would fit that. And here at Navigant, we don't focus on product profitability as much as we do meeting the needs of our members. And that's one of the neat parts about working for a credit union.
Exactly, and I think that's what's so outstanding about it, because when you look at it, you see signs for payday lenders and payday loans, all over the place. They're so, numerous. But looking for options, alternatives, where someone could go so that they could avoid all the pitfalls that come with a payday loan. Seeing a credit union, seeing Navigant doing it, and then understanding the reason why, just as you say, that the real focus here is not that you're looking to make profit off of this loan, but basically this is a way to help members who get in these scenarios where they need that type of assistance.
Absolutely. That's what drives us. That's what our mission is. And I think that being able to provide a longer term to repay the loan than a payday lender would allows folks to get out of this debt cycle and to be able to grow and meet more of their financial needs.
Exactly. Brian, tell me, are you finding that it's becoming a popular product at Navigant? Are folks taking advantage of it?
It is, and I think initially we thought that we would see more penetration in our emerging markets, but we're really seeing it across the board. We've got 15 locations, we've been around for 102 years, and we're seeing members come in and seek us out for this particular loan, in many cases because they know someone who's benefited from it, and it's been recommended to them as a way to avoid, as you said, the pitfalls of a payday loan.
Oh, God knows, and we all know that, in the payday loan scenario, and it's not that I'm looking to badmouth that as an option, but there's a lot of issues that are attached with it that really could get an individual into dire financial straits, particularly missing payments and the extent of the interest rate that's being paid or required for it. It's like, my God, you need to have an alternative. So tell me once more, for our audience, again, the criteria for being able to access Smart Start at Navigant. What do I, as a person, the criteria that I need in order to get it from you?
Absolutely. You need to be a current member in good standing, and you also need to have an account that's established with us, direct deposit of your pay coming in, and we need to see a history 4 to 6 weeks. Once we see that direct deposit hitting, you're eligible to apply for the loan. You can come into any one of our 15 locations in Northern Rhode Island or the East Bay, and we'll walk you through the entire process, up to $600, with a 90-day repayment structure that comes right out of your account.
And I think you also might have a little note on your website as well.
We do.
Navigant's website.
We do. Our website is www.navigantcu.org, and you can go right onto our website. You can get information about the product, and then come in and visit one of our branches to apply.
Okay. Brian, I appreciate it. Thank you so much for joining us today.
Thank you.
And again, thank you for Smart Start. Thank Navigant for Smart Start.
Thank you, Walt.
You could pick anything you want. If you don't have a choice, people pick for you.
In this month's Credit Union Spotlight, Wave Federal Credit Union CEO Paul Archambault shares insights on his credit union and the value it delivers to its members.
Yeah, we're a credit union that started in 1938, so we've been around for almost 80 years. We'll be celebrating next year, it'll be our 80th year. We have about 7,000 members, about $110 million asset size. And we were formed back in 1938 by the employees of Narragansett Electric as a seg group credit union, and we've expanded to a community-based charter that serves counties of Kent County, Providence County, and Washington County. We're pretty much full service. We have all, certainly the deposit side, we have savings, checking, and various investment products, as well as on the lending side, we do everything from first mortgages and member business loans to auto loans, and even small loans for members that need to establish credit. We do a lot of $300, $500 loans, just helping members get it started in their credit. At Wave, it's very important to us. We feel like we do it every day, and it may be, somebody comes in to visit us and looking for a personal loan, for whatever reason. We try to educate the member to put them in the best product that would be both beneficial to them and, certainly without taking additional risk at the credit union. But we also, we try to find them, try to meet their needs on a regular basis. It's a lot of positive stuff. I think we build trust with the members when we kind of maybe give them a different alternative. My philosophy is always give the member, hey, this is something that we can do for you when you're looking for financing. If we can do it, whether it's, if we can give you 3 options and you choose what's best for you, we can, it ends up being your choice, but at least that way we feel we're doing the best job for the member. No, I think I'm proud to be, I've been with the credit union for 35 years. I'm proud of being that, and I think one of the things that's been great in my career is the cooperation, and I know that's the new focus for the trade association, the cooperative association, is being cooperative amongst credit unions, and we've had a lot of friends. We do a lot of things together, including things like a cooperative network of ATMs where we can visit one another's ATMs and have no surcharge. We do the same thing, a little smaller group on shared branching where our members can visit institutions from around the country as well as Rhode Island, just the added convenience and just showing how we work together as a group.
That's our show for the month of August. As always, we invite you to take a minute to tell us what you think by sharing your comments with us. Our email address is betterbanking@ccua.org. Again, thank you for joining us. For all the credit unions across the state of Rhode Island, I'm Paul Gentile, wishing you a better banking experience. See you next month on Better Banking.